The forced sales have begun. In this video, I'm going to go over how one of the big four banks is now telling their customers that can't repay their mortgage to start selling. And I'm also going to go over the huge spike in mortgage stress. Many customers are now at risk of default, and every day the risk is rising that this property market correction is going to turn into a property market crash. If you own or are looking to purchase your next property, you need to understand what is happening in the market right now because things are deteriorating rapidly. Let's get into the video. If this video brings you value, please like for the whole of the YouTube algorithm and comment your thoughts below. Do you think the property market's going to crash, or do you think the property prices always go up and double every 7 to 10 years? And subscribe, because according to my analytics, 70% of you watching this video have not subscribed. So you better subscribe now to stay informed and updated on what's happening in the property market and the Australian economy and personal finance and investing. Let's get into it. So, which one of the big four banks is now telling their customers to sell, and which bank is going to win the race on cashing out on their customers before the market crash? NAB has urged their customers that are at high risk of default on their loans to sell sooner rather than later, and they've recorded a huge increase in credit impairment charges over the last quarter. NAB Chief Executive Ross McEwan said customers should sell before prices fall even further. He said some customers are better off that already have some equity in their property to sell it now before that equity disappears, and that way they can support themselves during these hard times where they try to drag it out, 6 to 12 months, that equity could disappear and then they'll be forced to sell anyways and have nothing. The former boss of the Royal Bank of Scotland has said that we've seen in other parts of the world where people in crises have tried to hold on to their homes and then they end up walking away with nothing. By the 5th of August, NAB contacted half of their customers that are on loan payment deferrals to see if they can start or want to start repaying. And only 16% of people said, okay, I'll start paying now. NAB seems less confident than its larger competitor, Commonwealth Bank, where Commonwealth expects up to half of their 195,000 customers that are on low loan repayment deferrals to start paying again. This is very alarming that only 16% of the customers that they contacted are going to start repaying. And the mortgage loan repayment deferrals end in March, so does that mean we're going to start seeing a huge amount of distressed properties coming onto the market in March? Let's have a look. The banks can't keep deferring their payments forever. Yes, maybe they can do it for 6, 12 months, maybe even 18 months. But eventually they're going to have to start getting return on those loans because the shareholders will want returns, and also their profit margins will start getting squeezed, and they will have to start either telling the customers to figure out some way to start paying again, or they're going to have to start telling their customers to sell. This means over the next 6 to 12 months, we may see a spike in distressed properties coming onto the market. So what you should do in your suburb, because every market's different, is you should keep track of the listings in your market. And if you're in Melbourne or Sydney now and listings are coming on, there's a high chance they could be distressed properties or very motivated sellers. And another alarming trend that we are seeing is mortgage stress is skyrocketing. There are now 1.57 million Australians in mortgage stress. Now that doesn't mean they're all going to default, but mortgage stress means 30% of their income or more is going towards the mortgage. Now this was only 1 million, last year. So you may say, they're not at risk of default, it's all good. But why has there been such a big increase? The reason is because a lot of those people are now on welfare payments like JobKeeper and JobSeeker. And people are saying, it's all good, they've got JobKeeper, they've got JobSeeker, but this is now being reduced. In January, JobKeeper will be reduced all the way down to 1,000, and we don't even know if JobSeeker is still going to be there after December. They're going to relook at it then. So there's no way customers can, service a $500,000 or $400,000 mortgage on $1,000 to $800 a fortnight. So we will see more forced sales come. Also, underemployment has skyrocketed during the last 3 months. Roy Morgan has underemployment at 23%. So even though the official unemployment rate is only 7.5%, if someone's, getting an hour, 2 hours work, they're classed as employed. But that doesn't mean that, they can live on 2 hours a fortnight. And with 23% of the workforce unemployed, a lot of them will have mortgages. They're probably going to have to sell too. Another alarming statistic that came out from Digital Finance Analytics Martin North is he says now there is over 101,000 customers at risk of default. This is very serious and this number is rising. Sure, it's not huge yet, but we're only just begun. People can hang in there from savings or selling assets, but eventually that money's going to run out and the number of people at risk of default is going to rise. Now let's get into the states that have the highest mortgage stress. Firstly is Tasmania coming up with 48% of their customers in mortgage stress. And I think this is probably because we've seen huge price increases in Tasmania recently. And also a lot of the workforce depends on tourism. One we have to keep an eye on, which is, making a huge increase, which is pretty obvious, is Victoria. Victoria is slowly creeping up to that #1 spot and mortgage stress is now at 43% in Victoria. WA is at 41%. And, it always looks like that WA, can't go any lower. It's been declining ever since 2007. It's down nearly 22% now. And everyone's been like, oh, it's a bottom. And it just keeps going down, which is very unfortunate. South Australia is at 39%. And there still has been some small increases in prices overall in South Australia. So we'll have to keep an eye on that because as this downturn continues, it will become more broad and we may see prices start to decline even in South Australia. New South Wales is at 38%, so surprisingly they're still doing pretty good, but we'll have to continue to monitor the situation in New South Wales. There may be a lot of investors in New South Wales or Sydney that will come under stress in the future. And Queensland, doing pretty well, all things considered, is only at 36%, and that's pretty obvious because their state economy has been opening up and property prices haven't gone up, so rapidly as in Melbourne and Sydney and Tasmania. Australian Bureau of Statistics has released their lending data and obviously there's been a rebound in lending because there was a huge crash in April and May where lending in actually May dropped 11.6% and lending has rebounded 6.2% in June, so it's still nowhere near to what it was pre-March and February levels. New lending for investors was up 8.1% and for owner-occupiers it was up 5.5%. And I think there may be a small increase in investor lending because the margins between owner-occupier loans and investor loans are shrinking. Despite the rebound in lending activity, the value of home loan commitments was still down 10% compared to its March levels because of the huge falls in April and May. So what the bloody hell does all this information mean for average Joes like us wanting to buy that next property or wanting to buy our dream home or buy an investment property? This means more distressed properties are going to come onto the market, maybe not right now, but in the fourth quarter and in the first quarter of next year, we will see an increase in distressed properties. And if they don't extend mortgage repayment deferrals after March, there will be a big spike of distressed properties coming to the market. But hey, it seems like the government and banks are determined to not let the property market crash and they could extend the loan repayment deferrals after March. But even with that, there still will be for sales. Another thing that's been quite laughable and a bit frustrating is the amount of articles that are coming out to say, how well the property market has done and hasn't crashed, it's all good. And that is because property is an illiquid asset. You can't just, when a crisis comes, bang, you sell your property in a day like shares and then the data's there straight away. Property is an illiquid asset and it takes year to 2 years for the full extent of the falls to materialize. For example, someone say in March lost their job, they got $1,500 for JobKeeper, they were able to defer their home loan repayments, maybe they were okay for 3 to 6 months, but then JobKeeper gets reduced, maybe the company they work for goes out of business, they can no longer get JobKeeper, and maybe they put on JobSeeker. And then the bank starts saying, look, is there any chance you're going to be able to start repaying in 3 months? And then the guy says, look, no, I've just been laid off work. There's no chance you're going to be able to repay. Then the bank may say, right now we're in August. They may say in September when spring comes, the selling season, they may say, look, you've got some equity in your property. Maybe you should sell. Then they start a campaign. They put their property on the market and they may sell in October, November. But then we won't get that data till December, January. And then once people start seeing the prices are falling, the confidence in the market falls, people start deferring their purchases instead of saying, why would I buy now when I can wait 12 months and, you know, get a property 10 to 20% cheaper, then that will make the declines accelerate. So guys, this has just begun. Prices are going to fall for the next 12 to 18 months. You know, even though it's only fallen by a few percent so far, it will fall at least 10 to 15% nationally, I reckon, unless there's more intervention by the government. And in Sydney and Melbourne, where there's been huge speculation and huge amounts of investors' negative gearing that are going to be put in stress, prices could fall 20 to 30% easily. Nobody can predict the market. The government could come in and remove stamp duty, let overseas investors buy up all the vacant properties and, you know, give more cash for home buyers and investors. Who knows what could happen? But with today's fundamentals, because I can't, you know, give data that I don't know from the future, with today's data, with today's fundamentals, there is definitely going to be a decent amount of correction in the Australian property market. Again, guys, if you haven't already, smash the like button for the algorithm if this video brought you value, and subscribe for more awesome content on property updates as the Australian economy and personal finance and investing. I'll see you in the next one.